Welcome, curious minds, to another deep dive. Today we're diving headfirst into the latest financial results of a real titan in the paints industry, Kansai Nerolac Paints Limited. We're going to use their official filings, press releases, investor presentations, really unpack their Q1 FY 2025-26 performance.
Yeah, and our mission is pretty simple. Cut through, all that corporate jargon, get straight to what really matters for you. We'll highlight the key numbers, the often tricky market conditions they face, their strategies, and, well, what they're looking at next. It's about understanding the story behind the headlines.
Exactly. Think of this as getting the inside scoop, how a major company celebrating its 105th year no less navigates this constantly changing economic landscape. So let's peel back the layers, see what's really going on. Okay, let's start with the big picture, the overall canvas, you could say. Kansai Nerolac just announced its unaudited results for Q1, ending June 30, 2025. On the surface, it looks like, well, a modest brushstroke of revenue growth. That's a good way to put it, yeah. For the quarter, their standalone net revenue, it came in at Rs 2087.42 crores. And just for context, a crore is 10 million Indian rupees, so we're talking roughly 20.87 billion rupees. That's a 1.8% growth compared to the same quarter last year.
Okay, 1.8%.
And consolidated revenue also saw a slight uptick, 1.4%, reaching Rs 2162.03 crores. So yes, the top line, it did continue to grow, though, maybe at a more measured pace.
Right. And this is where the picture gets really interesting, I think. Because while that revenue edged up, profits tell quite a different story, don't they?
They certainly do. We actually saw a noticeable degrowth in key profitability metrics. Their standalone EBITDA, that's earnings before interest, taxes, depreciation, and amortization. Basically, a core measure of operational profit.
Right.
That was down by 6.7% to Rs 311.97 crores.
Okay, 6.7 down.
Yeah. And profit before tax, PBT, also decreased by 4.1% to Rs 310.08 crores. And then when you look at net profit after tax, PAT, that declined too. Went from about 241 crores last year to 231 crores this Q1. Standalone, that's about a 4.2% dip.
And the consolidated numbers show very similar trends. Same 4.1% degrowth in PBT and PT.
Okay, so modest revenue growth, but a clear dip in profitability. What does this combination really signal? What were the main factors in the business environment this quarter that could cause that kind of disparity?
That's the critical question, isn't it? What's hitting their margins? The company pointed to several headwinds. There was sluggish demand in the automotive sector. That's a big segment for them.
Right, automotive.
Geopolitical challenges. They continued to cast a bit of a shadow of uncertainty. They also mentioned an early monsoon impacting the later part of the quarter. And there was some disturbance back in April that specifically hit key markets in North India, hurt their decorative performance.
Okay.
So yeah, even with the top line growing a bit, these external pressures clearly squeeze the bottom line.
But it wasn't all dark clouds, was it? There must have been some positive trends, some silver linings mentioned.
Absolutely. On the positive side, raw material prices were described as benign, which, usually helps profitability.
Usually, yeah.
Forex, foreign exchange rates, remain volatile. That can cut both ways, canceling out some benefits. Rural demand was stable, that's good. And crucially, the government's continued focus on infrastructure. That provides a strong ongoing tailwind for the whole paint industry.
Okay, infrastructure focus.
And yeah, a decrease in crude oil prices. Generally good news for paint makers, since crude's a key input.
Right. So, given that mixed environment, how did their different segments actually perform? Kansai Nerolac is big in both decorative paints for homes and industrial coatings. Let's start with decorative. How did they fare with all this going on?
Well, for decorative, they did see some signs of demand revival. That's encouraging. However, that early monsoon, it clearly put the brakes on in some areas. But interestingly, despite the April disturbance up north affecting retail, their project business, the large-scale stuff.
Big projects, yeah.
That actually saw a healthy mid-single-digit growth. Exterior texture and waterproofing products were particular bright spots there. Makes sense with the infra push.
And what about innovation? In decorative, are they just riding market trends, or are they actively trying to shape them?
Oh, they're absolutely shaping them. This is where it gets quite exciting, actually. Kansai Nerolac launched 3 new products in Q1 alone, and these already contribute over 10% to their decorative business.
Wow, 10% from new launches.
Yeah, significant. Take Nerolac Perma No Heat, for example. It gives superior whiteness, dirt resistance, and it can reduce surface temperature by 15 degrees.
15 degrees, that's substantial.
It really is. Think energy efficiency, especially in warmer climates. Then there's Soldier Rain Raksha White Emulsion. It's a low VOC product.
Good for air quality.
Exactly. And what's impressive is its 300% elongation. It can stretch like crazy without cracking. Offers a great waterproofing warranty. Plus, they saw continued strength in construction chemicals, premium wood finishes, and their Paint Plus range that really gained traction too.
That's genuinely innovative stuff, so they're selling solutions, not just paint cans. Okay, now what about the industrial side? They're known as a market leader there.
Right. In industrial paints, despite that overall sluggish demand in automotive, Kansai Nerolac actually managed to perform well, even gained market share. They put it down to various strategic initiatives, probably customized solutions, strong client relationships,
Makes sense.
performance coatings, that's a highly specialized area, registered strong growth, and tech upgrades boosted their premium PU segment, polyurethane, known for durability.
Right, the tough stuff.
Exactly. And they're not standing still here either. They're introducing things like a neurosiloxane system for steel structures and an anti-carbonation water-based system for concrete. Both are designed to increase their total addressable market, offering specialized solutions.
Okay, so we've covered the financials, the segments, but a company's impact goes beyond just the profit and loss, doesn't it? It's fascinating how much attention Kansai Nerolac seems to place on ESG, environmental, social, governance, and CSR.
It absolutely does. And you have to consider how deeply they integrate sustainability. It's not just talk. They're aimed to create environments for a healthy and beautiful future. Well, they back it up. They highlight being water positive, committed to emission reduction, using more green energy.
So tangible actions.
Tangible actions with verifiable recognition. Rated in the top 8 percentile in their industry group in the S&P Global ESG Index 2024. Got a bronze medal from EcoVadis, placing them in the top 26% globally. That signals a forward-thinking approach, mitigates long-term risks, builds brand resilience.
That's a strong commitment indeed. And what about their direct community impact, CSR?
Their CSR initiatives are quite diverse, actually, and localized. They're involved in developing sacred groves de Vrais for greenbelts, enhancing neurological healthcare access, painting schools, renovating them, providing study desks to primary schools, organizing public health medical camps near their plants. It really paints a picture of a company trying to connect its business to community well-being in a tangible way.
Okay, looking ahead then, what's the company's outlook for the rest of FY26? And what are the main risks they're keeping an eye on?
Well, the management anticipates an improvement in decorative demand, driven by, hopefully, a favorable monsoon that's key for rural demand, and the early onset of Diwali this year, India's biggest festive season, huge for paint sales.
Right, the festive bump.
Exactly. In the industrial segment, they expect their market-leading growth to sort of continue. The overall Indian paint industry is pretty substantial, remember? Around 77,500 crores as of March 2025. And continued growth in infrastructure, core sectors, auto, real estate, that should positively impact demand long-term.
So a cautiously optimistic outlook, you'd say. Despite the Q1 challenges, what are the main risks still on their radar, the potential bumps?
They definitely emphasize geopolitical tensions. That's a primary concern. Could lead to unpredictable supply chain disruptions, volatility in commodity prices.
Sure.
Still a factor.
Yeah, always lurking.
Always lurking. Inflationary risk due to tariffs is also something they're watching. So while there's clear optimism, especially for the domestic market, they remain very watchful of that broader environment. Things can shift fast.
This deep dive, it really highlights how even small percentage changes in financials can reveal so much, doesn't it? This complex interplay of market forces, internal strategy, external risks. We've seen Kansai Nerolac's resilience, adapting while staying committed to innovation and sustainability.
It really shows that a company's financial health is rarely just a straight line up. The ability to innovate, adapt, even when facing pressures like an early monsoon or geopolitics, that's crucial for long-term success. It's about building for the future while navigating, the now.
Exactly. And for you, listening in, what really stands out here is how a company balances those immediate challenges, like a dip in profit, with the long-term strategic goals, like their investment in R&D, those ESG initiatives we talked about. Perhaps an important question, I think. What tangible impact do you believe a company's sustained commitment to areas like environmental initiatives really has on its long-term financial performance and brand perception? Even when short-term profits face headwinds, something worth mulling over. Until next time, keep digging deeper.